Good evening. I'm going to explain you very simple method in option trading. Now it is important to understand option trading now at this present time. Now reason for that is because of the CAS. When closing auction system is in place, the positions will get closed on the same day because the option sellers now they can't hold overnight position unless they have a equity in their uh, hedged equity hedged with them. So it is very difficult for a option seller now to sell it. Most don't understand this. Let us go to the simple indicator which we have. I think by this time every one of you know that I make custom indicator. I present custom indicator because I have almost, I think, 189 indicators are there in the market, and I have mastered all of them. The only key to that mastery is how to use them. Because if you don't know how to use an indicator, it will be a disaster for you. Okay, this is yesterday's CAS. After that, today morning it opened and it gave a sell signal to us. Break up this, we can sell. But if you notice, it is above the super trend. So we are not going to sell it, even though people start selling when it comes below the, one second, excuse me. When it comes below the VWAP, that is the VWAP, this is VWAP line, and they start selling it. It is very unsafe because your stop is here. It is not ideal to go with that kind of risk. So what we do is, let me blow it up for you. So we wait a sell signal to occur below the super trend, below the VWAP, and we will enter the trade only when this low is breached. So this is our trade and our stop is above this. Now in this context, when you see a short position here with a stop of 60, you can easily target for intraday 1 is to 1.5. Now 1 is to 1.5 is an easy target, easy meal, we can say easy meal. 1 is to 1.5 is somewhere here. And if you look closely, it is why 1 is to 1.5? The question comes because it is intraday. It is intraday because you are trading on 5 minutes. It is intraday. So you can make around 80 with the 57 points risk. You can make around about 187, or at the most you can go for the see, even if you this is a reverse, this is the reverse signal. This signal basically explains that the short sell signal what it was given in the early morning, it is now reversed. So almost when you see that price and this price, it is same. So 1 is to 1.5. Okay, or you can go with this kind of bullish engulfing and with the hammer over here. Okay, so that's a point. So we say it is 1.5. So around about 85 points you have made. Is it a buy signal? The answer is no. This is not a buy signal. Now I want to talk about options also. When I said that I'm going to give you the information on the option also, if you see, this is the buy setup below the super trend, and we will not enter below the super trend because these are options, and I have selected the option on the 11th August to show you in a demonstration, not today's. 0-day expiries are very dangerous. But when we get in a bullish engulfing, over here above the super trend, and it is where we take a decision that this is our long, and below this signal bar there is one more small candle here. Let me highlight that. by taking this candle. We will keep a stop loss to that, only that low is to 126.70. So we will keep that to 126.70, 126.80, and we will target for 1 is to 1.5, or you can go for a 2 also, there is no question. So 16-point stop loss, and you can go for 1 is to 1.5. Now let me explain why it is important for 1.5. 1.5, once when you receive a 1.5, suppose where is your target has been reached, it is reached here 1.5. Once when you receive that, this, if a further going candle, if it pushes again, then this becomes your stop. But I don't suggest people to hold it. See, the reason is we hold it because we know by this time what we do is we will bring our stop from this low to somewhere profits over here. Okay. Now we see a red bar here. Red bar is ignored. Now we go and place our stop over here. Now what happened? There is a red bar. This is a rejection candle. This candle is a rejection candle. What we do is we want to see what happens after the rejection candle. So once the rejection candle is made, we keep below that. After the rejection candle, market closed high, then it reversed, then it made a hanky pinky, then one more hanky pinky, then it made a close above and making this as a lower fractal. Okay. So what we do is, once when the price close above this, here this price is closed above this, so we will straight away trial our stop to the previous impulse within the candlestick. See, from this bar it went this bar and it closed here. Okay. Again we will look into the rejection candles. Again it made a rejection, second rejection, third rejection, fourth rejection, and in the fifth candle it made a new closing high. When that is made, we start coming near to it. So this is the candle which closed above this bar. Okay. So we put one red bar over here. Okay. So this takes time for you to learn. We put this, it came back and it made a new closing in this bar. Here it is a new high closing. This is within the closing, within the previous high closing. So this is a new high closing. Again, we got a one more fractal here. We trial from here to this low. We have a red bar ignored. What is happening here? Again and again you are getting a red bar, red bar, red bar, red bar. And once you get in series of 1, 2, 3, 4, and if you see fifth red bar, it is time to get out and start trailing the stop candle bar by bar. The next bar, red bar, okay, we are going for red bar. Next bar, green bar, okay, we are going for green bar. Next, rejection candle, okay, we are going for a rejection candle low, and we got stopped out exactly at this bar before the reversal. Now we have 5 minutes time to think about it. The entry was made here and take profit was made at 223, entry was made at 141. It may surprise you that is this possible? Only when you secure your profits to certain extent. Suppose when you made an entry at 141 and when you put the stop over at 156, all you have to do is you have to just trial. You don't have to trial the take profit. Now you have to trial only stop loss. Stop order, stop order, stop order. For example, I'll just try to show you that. I'll put in a buy limit. I'll put in a say 160. Okay, it won't trigger buy now. Okay, so it has placed here. So now we have a take profit candle also. We can place that, and we have stop loss candle, stop loss also. We can place that. What happens once when the take for an idea of take profit reaches? Okay, idea of take profit reaches, then your stop loss start going upside. Okay, then you will start increasing your stop loss. When you start increasing your stop loss, basically either you will be hit with the market order or you will continue to gain the profits. Profitable traders are always known for trailing their stop, not booking in advance. But people who are new, they have some displeasure on holding the options for a longer period because they know that they can lose whatever they have gained. So we train them. We train them to make comfortable trailing the stop. All right. Anyway, this is what I wanted to give an answer. How traders, how profitable it is, and how you can be profitable in the options. Fine. See you tomorrow. Thank you.